and welcome back to KD's Businesses. Michael Lapede here in a small series on trust. We're going to do one more video. And in this video, we're just going to talk about the filing of a trust, a T3 return. So T1 is personal tax, T2 is corporate tax, T3 is trust tax, trust returns. And we probably know what a T4 and a T5 is, right? So we can go all the T's. But with a trust, starting in 2023, for the 2023 year end, the government is now requiring all trusts to file. But up to 2022, you would really only have to file a trust if you had tax payable, if you were requested to file, if you had asset movement, dividend distribution, any of those things. If there was no activity, no income in the trust up to 2022, a lot of people just didn't file the trusts. In 2023, they have changed the rules now, and you must file in every circumstance now. And this also includes all types of trusts, including bear trusts. Say you're holding title on behalf of someone else or your corporation or whatever, and you're holding a title of a real estate, for example. That's called a bear trust. Even those trusts are required to be filed starting in 2023. Now, at the end of the day, though, this T3 is due by March 31st every year. So it's different than the personal taxes, okay? And therefore, T3 slips are also due March 31st. That's why you see T4s and T5 slips are all due in the February, right? Same with RSPs, all that. But T3s, you have all the way till the end of March. That's why if you're getting a T3 slip for your personal taxes, don't file your personal taxes till April to make sure you got all your T3 slips, right? So trusts are filed by March 31st. Now, if you have a loan with your trust, there should be interest always, and you have to pay that loan, either to or from the trust, pay the interest on that loan by the end of January. It's 30 days after the year end. You got to make sure you pay that interest on the loan. So there's certain things with a trust that make it a little more complex to make sure. But this filing that we have to do, this T3 return, is basically a tax return for the trust. But now in 2023, it's more intense. They've added all the information for the settlor, the trustees, and the beneficiaries. They want all that information. In the past, they just said, here, give us the trust deed. Now they're on a fishing for information for us accountants, so we get to go grab the information from our clients and have to fill it in to the tax returns, right? So it's more work for everybody, more money, more cost on behalf of the government collecting info. So they're letting us do their work for them, right? And the last thing you need to know is there's a failure to file penalty. So if you don't file, it can be up to 5% of the unpaid tax plus 1% each month of the unpaid tax as well. So 5% immediately plus 1% a month. And alternative, there's a non-filing penalty if you don't file, even if you don't owe. This is new, $25 a day for a minimum of $100 to a maximum of $2,500. So there's penalties by not filing by that March 31st deadline. So again, if you're 2022 and before, you may not have to file if you don't have assets, don't have money in there, it's just zero, no activity. That's fine, but in 2023, all trusts must file T3 returns now. If you need help with that, you got questions, let us know. We'll see you back here for the business tips soon again.